Good morning. Wanted to welcome you to the Palladium One webinar. Just a couple of housekeeping items before I hand it off to Derrick. Thanks for joining. If you have a question, you can look to the right-hand side of your screen, and you can ask a question in several different ways. You can do it with a public chat, private chat, myself, moderator, or you can use the Q&A button. And then we'll try to answer those questions towards the end of the presentation. Note that the presentation contains forward-looking statements, and management will be making forward-looking statements. So have a look at slide 2, please. And with that, I will hand it off to Derrick Weyrauch, CEO of Palladium One.
Hello, everybody. Thank you very much for joining us today. We're very pleased to be talking to you, and have obviously some very exciting news this week that we'd like to delve into. As Steve indicated, I will be making forward-looking statements, so please refer to the slide 2. It's also on our website for your more detailed review. For those that are new to the story, Palladium One is an exploration and development company. We currently have a market capitalization of approximately $19 million. At the end of June, our last reported quarter, we had $3.1 million of cash in the bank, and we currently have approximately $5.5 million of in-the-money warrants that we would expect to be exercised in the coming weeks as we advance the project. As you can see from the share price chart over the course of the last 6 months, it's been rather challenging. COVID certainly caused us a lot of heartache in the March timeframe, and we saw a huge sell-off on the stock as people were looking for liquidity. We had been trading up in the 18 to 19 cent range and have been working our way back since then. Prior to today, our stock in the last 2 days was up approximately 70%. I believe today we're up at around 17 cents per share, with approximately 2 million shares having been traded. So even with the news that we released this week, we're just achieving the levels that we had in January, prior to the realization that the system that we're looking at could be significantly bigger than what has already been defined at our Kaukua deposit. Also, by way of background, the management and director team is led by myself. I've got about 30 years of capital markets experience in Canada and the US. For the last 12 years, my focus has been in the mining space in Europe, North America, and South America, both as a senior executive and non-executive director of a number of companies. On our board, we're very pleased to have Peter Lightfoot. He's a globally recognized expert on magmatic precious metal and nickel copper ore deposits. He's formerly the principal geologist at Vale, where he retired a few years ago. And previously, he was responsible for Voisey's Bay, the Sudbury igneous complex, and Carajás. In fact, Peter wrote the authoritative textbook on deposition in Sudbury, one of the world-class mining camps. Also on our board is Lawrence Ralston, a 40-year mining veteran who started with Teck Resources and has had various management roles both on the investment analysis side as well as corporate management. Doing the day-to-day work and critical to our team is Neil Pettigrew. He is both a director of the company and our VP exploration. He lives in Thunder Bay, Ontario. He actually moved up there about 20 years ago during the last palladium boom, and he's also an expert on copper, nickel, PGE, gold depositions in mafic settings. Palladium One is an exploration and development company. Our target is large-scale platinum group element projects in Tier 1 jurisdictions being Finland and Canada. Our flagship project is palladium dominant. It's called the LK or Latina Calissima PGE Copper Nickel Project. It's in north central Finland. And you may ask, why palladium? Well, palladium is actually more valuable than gold. It's the highest value of the four major precious metals, but it also has significant industrial usage with regards to cleaning air from automotive emissions. And as a result of increasing environmental legislation over the last number of years, there's been a supply deficit in the market where we've seen 8 years of deficit, and we're moving into the 9th year now in 2019, even with the impact of industrial slowdown due to COVID. I'll touch on it in a second, but what's unique in this market is that there's very much an inelastic supply that's meeting inelastic demand as a result of the environmental regulations that I referred to. Also, what's interesting in the PGE space is that there's been a industry consolidation that's been underway and led by some of the South African producers in the last few years, and that has had a very material impact on the market. But really, what is important, I think, for investors to understand is that we have an existing NI 43-101 open pit constrained resource that underpins our value proposition and very realistic growth expectations as we announced this week. And also, as I indicated, we are well funded and anticipating more money coming in-house without needing a financing as a result of in-the-money warrants. Give you a little bit more context of the market itself. The palladium market is very constrained from supply because about 90% of mine supply comes as a byproduct of other mining activities. As a result of the byproduct nature of the supply, miners are inhibited from increasing supply without affecting their primary product. And those primary products tend to be platinum out of South Africa or nickel out of Russia. And you can see that from a regional and jurisdictional risk perspective, we have approximately 41% of global palladium supply coming from Russia, predominantly from Norilsk, and about 38% from South Africa. So we believe that with supply constraints due to the byproduct nature, as well as the jurisdictional risks associated with the current supply, having a project that's palladium dominant in a tier 1 jurisdiction would bode very well and garner a lot of attraction. We're located in north central Finland. It is ranked as the top jurisdiction globally from a mining policy perspective by the Fraser Institute. We're in a part of the country where there's a tremendous amount of infrastructure, roads, power, water, skilled labor, etc. So we're benefiting quite a bit by the existing infrastructure, and that should bode very well in the future as we advance towards a development scenario. As announced this week, we have a major discovery which increases the mineralized strike length of our Kaukua zone or Kaukua South zone from 600 meters to 4 kilometers. What's I think very important here, and I'd really like to credit Neil and the team on this, is that of all 11 discovery holes that we drilled in August and early September into this zone, they all hit magmatic sulphide mineralization. And seeing such a success rate, we're absolutely thrilled with. And what it really has done is it has validated our potential to materially increase the existing pit-constrained resources that we have, but as well as it confirms that the IP chargeability anomalies that we have discussed at length over the course of this year continue to confirm the potential for PGE, copper, and nickel mineralization. Importantly, the intercepts that we have are quite shallow. The whole setting for LK is shallow disseminated mineralization. And given we had the ability to drill shallower holes than initially anticipated, we have been able to drill both up dip and down plunge on several sections. And as a result of that, we have the ability now to do some modeling of potential tonnages. Our intercepts range from between 15 and 100 meters in the core. True widths would obviously be somewhat different. This slide 8, delves into, is a little bit busy, but it shows you the meat of the story here. So what we've done is zoomed into the top of our property package at Kaukua. The existing Kaukua resources outlined in the dotted yellow lines. In the background, all the brown and gray coloring or fill is the IP chargeability anomalies that we discovered and announced over the course of this year. We did 5 major survey grids covering 12 kilometers of our 38-kilometer package. One of those grids here is the 3-kilometer extension labeled Kaukua South, and that got us extremely excited when we saw those IP results. Fortunately, we were able to, the COVID shutdown, drill hole number 6, as you can see in black on the western side of this image. We were able to get that hole drilled. We had a fantastic intercept that really proved the thesis that the chargeability anomalies that we have detected continue to demonstrate excellent zones of mineralization. Hole 6 encountered over 1 gram of palladium equivalent grade in a strike length of approximately 170 meters. Most importantly, however, is the core interval, 63 meters wide at approximately 1.9 grams per ton, very near to surface. And when you look at the grade of it compared to the grade that we have in the Kaukua resource, it's basically identical. It's the same rocks. The intercept, however, is about twice as wide as the average interval that we're seeing at Kaukua. So it has the potential to actually add more tons than we had initially forecasted. The Kaukua South zone is outlined in the red dashed lines, and based on hole 6 and the IP anomalies, we plotted a number of holes and started drilling or resumed the drilling program in August, and those are outlined in the red dots, and it covers the full 3-kilometer strike extent of the new IP anomaly. And importantly, on the very western side, you can see hole number 35 here. We already have a hit there, so we know that this zone actually goes to about 4 kilometers. That hole 35 is 1.9 grams at 33 meters, and is actually higher from a grade perspective compared to our indicated resource grade in the existing pit. As we move forward, we have submitted a number of assays for rush testing. It has taken a while to do all the detailed logging for the various holes. We anticipate that within the coming days, hopefully by the end of the week, but not so sure about that we will be getting hole number 14 back. It's a 100-meter step out from hole number 6. Obviously, from the scale, it's quite a distance, but perhaps doesn't look so much. Following hole 14, we would anticipate that we are going to get a section of holes back where hole number 22 is located. We were able at 22 to drill both up dip and down dip. Moving to the next slide. Oops. Looking at the Kaukua zone from a different perspective, got 2 long sections here. The top section is looking at the existing drill hole assays that we have. Hole 6 that I referred to is shown here with the yellow highlight. You can see the amount of mineralization in that hole, and it goes nicely to depth. As well, we have the other holes that we drilled plotted. You can see here that it's a very large zone, requires a bunch of infill drilling, and gives us the potential to add very significantly to the resource tonnage that we currently have. The bottom long section is a sulphide analysis based on the visual analysis as the detailed logging was taking place. And the reason this is very important is because the mineralization that we're looking for is actually contained in sulphides. And the higher the sulfide content, the greater the expectation is for mineralization. And as you can see, very consistently through the holes, we have sulfide mineralization, and we've plotted that against the chargeability shells to show that the chargeability is providing a very good directional focus for us to encounter the zones that we are looking for. One of the things that's unique about LK is that in sulfides, we actually have a very high tenor deposit, and at 100% sulfide tenors, we would have approximately 3 ounces of material. So the understanding and modeling the sulfide percentages is extremely critical as we are moving forward. Stepping out a little bit from that Kaukua zone, which is outlined on this sheet, just looking down on the property package, the various outlined colors here are our property tenures. The Kaukua zone, and what we were looking at earlier, is outlined in yellow at the top of the page. The Kaukua deposit, again, this time it's in a red dot. The blue hash lines, vertical hash lines, are the 5 major IP grids that we ran earlier this year in order to develop, very good targets for further drilling. But all we've really done is talked about this one section here up at what's labeled Kaukua East on this slide. What I want to draw your attention to is that our survey grid ended where we have our exploration permit ending. We do have the property to outside of that, inside the mustard color, that's in what's known as a reservation under the Finnish land tenure system. But you can see that the contact here actually extends for a few kilometers east of the property. So we believe there's a lot of potential to just continue along what we've disclosed this week and perhaps find more mineralization. So we are intending to add to our exploration permit this section over on the eastern side. What we have at the bottom of the package is, again, a long contact. We have about 17 kilometers of contact. Again, the survey grids are shown. They all lit up. I'd refer you to our press releases earlier this year. We have drill targets in all of those areas. When you combine all of these areas and opportunities is what gives us lots of comfort that we have a very large magmatic sulfide system that has the potential to be a best-in-class deposit, Palladium One. The existing pit-constrained resource that we have at Palladium is, I think, important for people to understand. We have 635,000 ounces in the indicated category at 1.8 grams, and another 500,000 ounces in the inferred category at approximately 1.5 grams per ton. When we did this work, we were trying to run an economic pit using some very reasonable and credible assumptions, and the pit economics were actually run at $1,100 per ounce palladium price versus the approximately $2,300 price that we have today. And we included in our calculations various recovery factors, dilution factors, estimated processing costs, mining costs, in order to run the economics and develop the pit shell or the pit envelope. As you can see in the section here, the mineralization generally comes to surface quite wide. It goes down to about 275 meters in depth. We believe, based on hole 7 that we released earlier this year, that the mineralization actually goes much deeper, but we're going to need to have some more drilling to expand the size of the pit. What's really important from a low-cost mining perspective is that the waste to ore ratio is only 3-to-1. So we're very pleased with that, and should bode well for the future. But how does all this compare? We've got Kaukua, we've got a grade there of roughly 1.8 grams per ton palladium equivalent. We're looking at Kaukua South and see a lot of opportunity to grow it several multiples. But how does it compare from an investor perspective to other projects where there's a lot of palladium that are open pit and in a tier 1 jurisdiction. Well, when you look at the investable universe, there really aren't a lot of options, and I think that's part of what makes Palladium One unique. You have 3 advanced projects on the left here: Polymet, Generation Mining, and New Age Metals. They have many more meters of drilling, perhaps hundreds of thousands of meters of drilling. They have defined large tonnage projects, which is something that we've been lacking. Polymet has a project of about 700 million tons. Generation Mining, if they had 100% ownership of the project, would be around 190 million tons, and New Age Metals about 120 million tons. Whereas our project at LK, with our 30,000 meters of drilling at this point in time, is about 22 million tons. So as we get the drill results in over the next few weeks, we anticipate having a much better visibility of the degree of tons that we can add, and perhaps rectify the shortcoming or the perceived shortcoming in the story, in that although we had the grade, we didn't have the scale. But I think we now have clear visibility for scale. And there's obviously some other entrants in the palladium space that investors would have heard about. Interesting projects in North America, a little bit earlier stage in that they don't have at this point in time measured and indicated resources. So we're a little bit ahead of the curve compared to those opportunities. So in summary, our LK, or Latina Calima project, it's 100% owned. We have 38 kilometers of the favorable basal contact. We have just scratched the surface, we believe, based on the 3 kilometers of IP geophysics we've done at Kaukua South, where we've done the drilling there. So there's lots of room for upside. Again, it's open pit, therefore suggestive of low cost mining. It's high tenor palladium in that we have a ratio of 3-to-1 versus platinum, which is a little bit unusual. With any of these projects, understanding those ratios is important, because quite often it is a 1-to-1 ratio, as some of the projects in North America. Or if you get into more challenging jurisdictions like South Africa, you might have a 3-to-1 platinum versus palladium ratio. So that 3-to-1 palladium versus platinum ratio is part of what makes this project special in our mind. And obviously it has similarities to the Platreef style deposits in the Bushveld complex. One of the important things when looking at any of these polymetallic projects, as I indicated earlier, is understanding your metal content or tenor in your sulfides. And as you can see here, PGEs were roughly 84 grams per ton PGEs, including about 58 grams per ton palladium, 13% copper, and 10% nickel. So very high tenor, and it's all about finding the zones with higher sulfide. Importantly, there's one pass of metallurgical work that was done on the project. SGS Canada did that work in 2010, and were able to develop at that time a saleable bulk concentrate with a final grades in the 16 to 17% range, copper, nickel, with roughly 1 ounce of palladium plus gold plus platinum. We still have work to do on the metallurgical side of things. The recoveries at the rougher stage were quite good, but unfortunately there was no optimization work done at that time. So that is on our to-do list in the near term. As part of the sample preparation for assaying for the recent drill program, we are preparing metallurgical test samples, and we'll be sending them to the lab in due course. We also will be looking at a split concentrate versus having a bulk concentrate. Importantly, I think from the investor's perspective, is that we have not encountered any deleterious elements that could give us smelter penalties, and our final mass pull is quite respectable at only about 1.6% as currently understood, therefore equating to a potentially very low cost of shipping to the smelters. I'll just touch on our KS project very shortly. KS joins LK. It's outlined in the large red box here. It's about a 20,000 hectare package. that is on top of a very large regional scale gravity and magnetic anomaly that goes across Finland. We got first mover advantage by picking up this property via reservation earlier this year, and that the target here is massive sulfides through this or in the feeder dike that fed the LK project. The thesis being, to the extent that we have very high tenor in LK, if we can find some massive sulfides in a feeder dike, the value of that could be quite significant. One of the interesting bits of news that's come out over the last couple of weeks is that the Finnish state is going to be doing a very deep hole, about 5 kilometers to the east of our project, that will give us quite a bit of information related to this project. There's been a tremendous amount of academic work done on the project. However, there has been a very little field work, so that's going to be very telling. The reality on this project is that it outcrops at the Russian border, porpoises down at depth, and that's why the government's going to be doing about a 3,000 meter hole. It's believed to come closer to surface near LK, and that's the reason it's interpreted to be the conduit for deposition. As you can see on this slide, we have some of the academic work outlining the Dyke and the LK project, and our focus obviously would be that those sulfide traps and following up the excellent work that was done previously. A potential analog for this project would be the Voisey's Bay style mineralization, specifically the eastern deeps. So it's a big game hunting, whereas LK is very much a straightforward, we believe, a farming exercise to do the detailed work in terms of drilling and assaying to outline the economic pits. So our focus is not this project, it's very much advancing LK at this juncture. So in summary, we have a commodity that has very inelastic supply and inelastic demand due to environmental regulations, and there are very few investment alternatives. So we think we're very well positioned, and fundamentally, even just at Kaukua South, have a very credible resource growth path, and that we plan on advancing as we move forward. So with that, I'll take a pause and see if there are any questions. Neil Pettigrew is on the line with us, and we'll be happy to answer any of the technical questions as well.
Derrick, one of the questions that came through was, can you talk a little bit about PG production in Finland?
Yeah, why don't I let you do some talking?
So there is a smelter in Finland that Palladium has, and so Finland was actually one of the earlier areas of nickel cobalt production too, and so they actually have cobalt refinery there. So yes, there is in-house production. You're getting a little bit of they bring in a lot of feed actually now from other parts of the world, because Outokumpu used to be a big nickel producer, but now less so. There's Kivista, also some other projects that are not quite in production yet. So there's still a lot to be found up in this area. I find that Finland is just massively underexplored compared to my backyard in Canada here, because the country was state-run, right? Private exploration did not happen until the 90s. We go to another question. So Sasha, time to move the project forward. Yeah, so what we're looking at right now is that we just wrapped up the resume program. We are right now very much in the advanced stages of planning the phase 2 program. And as Derrick mentioned earlier, we are expecting quite a lot of organic financing warrants in the next few days. And so we are hoping to get back out again this fall. We could be out as early as November to restart drilling. And in that case, we are looking at a program that would probably run for maybe 5-6 months to completely drill off to infer the Kaukua South. So that's sort of the time frame we're looking at. If we get back out right away, we could really kind of have an answer of what the size of this thing is in the next 6 months.
And I think what's important for people to understand, and I'm addressing a question from the attendees, is the depth. We're very much focused on defining open pit mineralization. Our drill holes are not that deep. I think our deepest hole was only about 300 meters on average. We're less than 200 meters in depth. So our focus right now is shallow mineralization near surface. And what we're seeing in Kaukua South is that as we move east, it appears that the mineralization is actually getting shallower and perhaps a little bit flatter. So at this juncture, we're not looking for an underground scenario where we'd need significantly higher grades, but that is something that we can be looking at down the road.
So we have another question here from Anonymous about the correlation between the tenor of the grades and the IP response. So the IP works very well out here because we have a low sulfide deposit. Sulfide percentages are on the order of 1 to 3%, and there's very low sulfide in the Weyrauch. And so when we get an IP anomaly, odds are it is the sulfide we are looking for. However, IP is not quite refined enough in order to kind of get tenors out of the stuff. So you still have to test it. But thanks to the Finnish Geological Survey, we have excellent mapping in this area, and so we really know where our horizon is. That 38 kilometers of the favorable horizon is pretty well mapped out. It's just never been tested for the most part. And so as we get the IP anomalies along it, then we do have to systematically test and just figure out what the tenor is. But the tenor is quite consistent through Hakiaho, actually. So that really kind of helps us out.
Another question, Neil, perhaps you can address is with regards to flotation. Do we think that's going to be significant to achieve the recoveries, or are we going to have to look at a hydrometallurgical solution? Perhaps expand on my earlier comments.
Sure. So previous operators had looked at hydrometallurgical, as had the stuff down in Duluth complex. We are not really looking at that. The metallurgy that has been done has shown that a saleable concentrate can be produced with flotation alone. And so the angle that we are looking at is really in trying to refine the cleaning stages. So we, as I mentioned, had a very good recovery in the rougher. We want to make sure that we keep those recoveries through to the cleaning stages and do some other tests like splitting the con for a copper and a nickel con. And so, the fact that they did achieve a saleable con on the first go was very encouraging to us. And we think that, more than 10 years have passed since that study was done. We've collected a very representative metallurgical sample, and, we're going to be doing quite a bit of test work on that. But yes, we do think flotation alone will enable us to produce saleable concentrates from this project.
One of the questions that's come in is, do you plan to sell the project or do you want to do mining on? The person also asks, would you be able to start mining on your own, or do you need a project partner in terms of know-how and or finance? I think, the answer to those questions is really that right now we're trying to understand exactly how big this is. We certainly have a clear path that we believe to have a project that just in this Kaukua zone that is several times the size of the existing Kaukua deposit. So it's probably a little bit premature to think about a mining scenario, and we need to just do the heavy lifting there to define the size of the project. And ultimately, I think that will define whether or not somebody will come along and look at us from an acquisition target perspective, and also assist with the assessment of whether or not at that point in time it makes sense to get a project partner in or not. But right now, we're looking at creating value through the drill bit to define a very large scale resource.
Another question I see here from Randall. The depth Kaukua South, so hole 6, which we drilled last program, is down to, starts at around 60 meters, goes down to 200 meters. But some of the holes that we've drilled in the recent program that are in the release we put out the other day actually collared into mineralization. So we have it coming to surface, and we actually found that Kaukua South shallowed as we went further east. And so most of the holes that we have drilled are 200 meters or less, and the mineralized intercepts start 20, 30 meters down and like 150 meters or something. I also see a question from Kate about where to market their concentrates. So, well, of course, we'll go to the best place for the price. We have Palladium in country, obviously, which is like a 2-hour drive away from the project. This is an obvious one. However, it really comes down to who gives us the best price. So, you know, Sudbury is a possibility, even South Africa, some of the PG refiners there.
But the reality is we haven't done a concentrate marketing study at this point in time, and that's part of the work that we're going to be looking at doing with the metallurgy. But if I can just, I'm going to show this my screen again and just pull us back into Kaukua South and try and address perhaps a little bit better the potential scale that we're looking at. So on the western side of Kaukua South, we have hole 35, which is a very nice intercept, 33 meters, 1.9 grams. If you were to draw an ellipse around that area going over to, well, where I'm outlining with my mouse, that's about 1,800 meters in strike length. The far eastern portion where hole 22 is outlined, that's another 1,400 meters worth of strike length, and there's about 900 meters in the middle of that. And I think if you do a volume calculation in terms of the potential length, width, and height of this strike length, you'll come up with some very large numbers in terms of the potential scale of the project. And that's really what we're targeting. We don't believe it's going to be consistently and very uniformly mineralized throughout its entire extent. There are going to be some dikes and other things that we encounter along the way. But the conceptual target here is many multiples of Kaukua. And that's what really has us excited, because you know, from the visual analysis we did, for example, at hole 22 with the up dip and the down dip holes there, we have a good handle on the geometry and can do the math in terms of volume over that 1,400 meter strike length, factoring in the scientific gravity of or the estimated scientific gravity of the rock. I hope that addresses that question.
Can you throw that slide back up there, Derrick, for a second? I think I'd just like to point out for a few of the people here about the history of the project here is you'll see a very sharp vertical line. And that vertical line is the difference between a 2008 survey from a previous operator and our survey, which goes farther out to the east. So if you look on here, you can see almost all the historic drilling was centered in this pit. And the previous IP survey actually suggested the Kaukua South anomaly petered out. And we actually found out that the last couple of lines of that survey weren't the best quality. We had the same operators this time. But the result of that was that the previous operators never pursued the mineralization further to the east. And there was a few reasons for that. The NP anomaly appeared to peter out, but also there was no outcrop over there or previous drilling. The only indication that interesting rocks were over there was a bit of regional magnetics. So we were really kind of going into terra incognita out there. But what we have found with our drilling is that there's a significant fault that separates Kaukua from the Kaukua South. And that fault has really kind of created the break. And so when people are going to Kaukua Pit, they're starting to get country rocks down to the south. They're like, okay, this is a different zone. But we're found that it really isn't. That is a block faulted chunk of the marginal phase up there, and Kaukua South is really just the extension of that. And so we've come into the project with a pit that looked fairly drilled off by the previous operators, and now we have this wide open trend to add ounces.
And I'll just add to that as well that on the far western side, you see this little zone of anomaly. That's where we did a test grid to set up the equipment back in January. As you can see, it has a nice anomaly sitting in it as well. We did not run any geophysics in this area that's labeled open for testing. So that's one of the things that we also be looking at is extending the geophysics in there to get a better understanding of what anomalies may or may not be there, in addition to the several kilometers that I mentioned earlier on the other slide going to the east, because this is really where the survey was cut off.
I see another question just popped in. So our preliminary estimate is something in the order of 17 to 20,000 meters to do that whole Kaukua South at 100 meter centers, the full 4 kilometers trend. So that is going to produce, very cheap ounces. We could be looking at something in the price of $1 or $2 per ounce discovery costs here, which is really what's got us quite excited here, is that this is a chance to really grow the ounce count on this project without dumping in hundreds of millions of dollars, kind of fair.
Yeah, I think, along that vein, it's important to note that prior to the announcement this week, the market was giving us a valuation in situ, if you like, enterprise value in the neighborhood of $9 to $10 per ounce. So with a definition cost of 1 to 2, we would anticipate a lift in the value of that expenditure, but as well, given the size increase that we're forecasting in the project, I think there's an opportunity to re-rate the enterprise value that's ascribed to our project on a per ounce basis. Stephen, are there any other questions? I don't. Well, hearing no other questions, I'd like to thank you all for your time and interest today. And please register on our website if you haven't already done so for our contact list, so we can ensure that you get the news as it is published. If there are any questions, please send us an email, info@palladiumoneinc.com. And with that, thank you very much.